Hi, Anthony. Welcome on the podcast. It's a pleasure to have you here.
Thanks for having me, Kel. Excited to be on.
Great, great. So, do you want to give us a brief introduction of yourself and of Rerail, of course?
Yeah, absolutely. So myself, I'm originally Greek. I was born and raised in Athens. I have family all over though, so I was always quite extroverted in that sense. Like I was in a lot of family in the US and otherwise went to the UK to study and stayed in London after. Started my career as an operator in fintech out of serendipity, but I was lucky enough to get into the space quite early. Initially in kind of like invoice financing, building credit risk models. And then 2.5 years later, I switched to venture. So I've been in early stage VC now since late 2014, always with a skew to what I call everything is fintech, which I'm sure we can talk a bit more about. I was
Yeah.
lucky enough to be relatively early days. 2014 was maybe a year after Stripe, a year before Revolut, and I was always focused on the
Hmm.
people side, right? So although I focus on the narrow everything is fintech area, I've been less of a top-down domain expert and much more someone who has focused on developing relationships with the founders and operators I've been meeting with the idea that they're the smart people that would get me smart. And so I've been in different firms and funds over time. I've been lucky to kind of lead deals in companies like, Truelayer in the early days and Primer, Kobe, Wayflyer, many others, which I'm happy to share more about. And then about 4 years ago, I thought I'd go back to operating. Always saw myself as building something of my own, maybe, a bit of an entrepreneurial family, and always thought that's kind of my end game. And so I spent time with founders and operators, which is where I started basically doing angel investments alongside them instead of joining any. So I realized, look, I'm an investor at heart. That's what I want to do. But also, it was the first time I was doing collaborative investing. And so I realized I could build a much deeper relationship of trust with founders from the get-go when I was not the kind of lead VC they're pitching to, and that all the VCs I've grown up with were embracing me and collaborating. So I was in this compounding position. So I founded my first fund together with a partner, Carmen, called Cocoa, which we're kind of deployed Cocoa One the last 3 or so years now. And as a second fund and an evolution of the fund from my side, I've now launched Rerail. And so to close that up, Rerail is a $20 million angel fund investing at kind of pre-seed seeds with a focus on Europe, but globally into what I call everything is fintech. And I'm privileged to be backed predominantly by founders and operators from the space, but also more broadly.
Oh, that's very, very interesting. I already saw a couple of topics that I would love to ask you more about. From your experience in fintech to the concept of collaborative investing. But first of all, I will start directly from the last point that you made. So about Rerail, you just raised basically 20 millions to invest. How hard it was in this environment, because this is something that I've recently been asking to many VC manager and many new funds, and we know that the environment wasn't the same like in 2015 or 2016. It's way, way harder now. There's no free liquidity anymore. Interest rates are way higher. So how hard it was for you to actually start this fund in this kind of environment?
It's a great question. It was not easy. So the first thing I'll say is that I started assuming I don't know anything. So although I've raised once
Hmm.
with Cocoa One together with Carmen, it was 2021 when we went out to raise. So we assumed, I assumed it would be a very different experience, and I went at it like a wartime CEO, right? I don't know if this will take 1 year, 2 years. It's going to be hard, but I'm just going to push through. I went and talked with a lot of microfund friends that have done it recently for recency bias, and I kind of put my plan forward and pushed through. It was definitely not easy. I will say though that a couple of things played better for me, and or in some respects it ended up kind of becoming more of a successful fundraise. I think the first is that it's not my first rodeo, right? Like I've done a
Hmm.
fund once before, even though this is a fund one of a series, it's kind of the second fund I raise. And so kind of the model and a lot of the learnings I have, people see it as, something that I can execute on again. I think the second is that I've had in, let's say outside in at least way, like founder, like GP market fit, like we say founder market fit, right? Like all of what I've done for the past so many years has been, either as an operator or as a venture investor, being in kind of the wider fintech area, and the network I've cultivated is a big part of my USP.
Yeah.
And so I think that the third thing is that at this market timing, and people don't talk too much about that, and they talk about the negativity and the difficulties more,
Mm.
is that I think there is a breath of fresh air within the kind of fund of fund community, where they're increasingly more interested, any allocator, maybe fund of funds more than that, to kind of go and back and double down on emerging managers, realizing they don't want to have a lot of the asset managers that have become very big AUM. Like, they want to keep some of the big brand names, but then allocate a bit more so increasingly into emerging managers. So there is increasingly an interest towards that. I was lucky to have done it, relatively fast for the current markets. I started like end of January, beginning of February, while I was still deploying Cocoa One, right? And so I wasn't doing
Wow,
more
that's
than
that's very
30.
good timing.
Thank you. I wasn't doing more than 30 to 40% of my time, and did my kind of first close just above target, end of July. So it was much faster than I thought.
Yeah, I mean, also taking in consideration market average, I think that you were very, very fast. We usually see funds being, raised in a between, let's say, 12, 15, maybe 18 months on average. So you usually take a lot of time. On top of that, I wanted to ask you a little bit more about your cocoa experience. So which were, the deals that you were most proud during that period?
It's very hard to pick favorite babies, no? I'm excited about a
Yeah.
lot of the portfolio. I think Cocoa One is early days, but I think I speak for both Carmen and I that, we're super excited about the portfolio being built there. We've had a big chunk of our portfolio already having done like follow-on raises in a market that hasn't seen too much, and that's
Mm.
encouraging, but it's too early to tell. I think a couple of names I'd reference, maybe three, but there's many more, and
Hmm.
hopefully like founders don't see it as like picking favorite babies. One is Joel Nordstrom.
Mm.
He, together with Joel and Johannes, are three co-founders of a company called Atlar. Happy to talk a bit more about that. But
Hmm.
I had a thesis on the space, looked at all of the competitors, ended up passing on all of them, thinking that the category is super tough to do anything in Europe. And then I met this team, and I went full on. Then I'd say a second one would be Pivot. Romain, Marco, and Estelle, again, three founders, ex Conto, ex from basically French scale ups, and going after the kind of indirect procurement space, which I think is very ripe and is having a why now moment. But in terms of execution quality, one of the top founders I've backed. And then I'd say Hyperline again, another French name.
Mm.
The VP engineering of Spendesk, when he was getting started to build something in the billing and kind of broader revenue cycle management space. And basically, I met him and ended up doing an angel round with him before Index did the seed round back then. So quite excited about him as well.
Oh, very nice, very nice. Well, maybe something, given the fact that you have a lot of experience in both directions, on fintech and on the VC side, I would like to ask you about the current environment that we saw in Europe. More recently, we have been seeing a lot of push in other countries, in other markets, like for example in the US, but also in Asia, also for example in Latin, in Africa, and so far and so forth. So we saw different kind of speed in the startup ecosystems, and it seems a little bit that we are a little bit behind in Europe in terms of velocity, in terms of execution, and everything else. So, given the fact that you have both experience at the same time on fintech and on venture, do you think that we lack something in this kind of environment? Do you see, like for example, that there is an advantage of starting a startup, for example, in the US, or even, for example, very 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 simply in the UK at the moment, compared to, for example, France or Germany or Italy?
Look, I'm very much an optimist in that regard, and I don't necessarily
Mm.
believe that like there is a structural reason, for example, for why like the US has produced, many more kind of larger exits in Europe. I mean, I think it takes a cycle, right? Like, it all
Hmm.
started from Silicon Valley and like having aircraft carriers as we call them, right? Like big success stories that breed, set the ambition bar and breed like
Yeah.
talent that comes out to either invest in the space or start something new. That takes time, having generations and generations. I think that's part of it. I think the level of ambition and optimism is something that the US has like fared really highly of. I think Europe, depending on the jurisdiction and cultural nuances, we have variations of that, but increasingly you see the bar set higher and higher.
Mm.
And if you think about structural nuances, there is no reason why not. Like we have very strong talent, very good kind of education systems. We have different industries that fare really well, you know, and I think like there's a lot of structural advantages as well, right? If you think about fintech in payments, for example, like we're even ahead
Mm.
of the US. I will say, of course, that the US market tends to be a much larger market in itself versus the fragmented continent of Europe. That tends to be a challenge at times, and but something that if you navigate well, it can be an advantage in you. And then I'd also say that, you know, exit markets, and maybe now is not the best time to be talking about these because a lot of them are
Yeah.
shut, and I think some of this will come back and we shall see. But you know, the IPO and public markets have always been in the US, right? Where you can do really
Mm.
well. There's very few companies like an Adyen, which ended up doing dual listing in the end, but like that come to market in Europe. And so there is an increasing there's an increasing focus into thinking towards US, right? That you need to go to the US before you go to public markets, whether you're a SaaS company or a company that's default global from the get-go, or a fintech company or something, you know, that is a bit more localized. I think the good news is,
Mm.
if I think about fintech, you know, regulatory landscape, APIs, you know, talent flows, you know, I think it's increasingly easier to think default global from the get-go, even if you want to build a
Mm.
local champion initially. And that's why I'm also spending, by the way, a lot of time in the US, not only because I'm again branching out into, although I'm doing core Europe, but also doing some US and global, but also because I think that bridge Europe to US is increasingly important, let's say.
Yeah. No, I agree with you overall. I think that you made a very interesting concept about, the local champion. This is something that, in my opinion, is working pretty well, for example, in payments. Even if we saw already also a couple of global champions like, Idean, Stripe, and so forth and so forth. But I think that, in payments more specifically, we saw many different attempts to have local champions. For example, also in Europe. We have, for example, Satispay in Italy. There's a couple of very good company in the UK that are trying to do that. Well, for example, I think about Molly and a couple of others. We had a couple of very good examples in the US with Venmo and Cash App and others. So, do you think that that kind of ecosystem, that kind of industry, it's more fragmented and should be more fragmented, or do you think that we will need more global champions under that point of view? So, how do you see the payment infrastructure of the future? You see under the hands of a couple of companies, or you see that more fragmented over time?
Look, it's a good question. I first will answer the venture side of this, which is that
Mm.
basically in fintech, more than any other market, I think the framing of the upside potential really matters, right? Because as you
Mm.
mentioned, like, you know, payments you can build, as we call it, like give me an untapped niche in payments any day, right? Like a niche in payments is
Yeah.
usually like multi-billion-dollar potential outcome if you execute well on this. I think there's other examples as well that are overlooked, like bookkeeping, right? Like, you know, we
Yeah.
have good examples with Penny Lane being like mainly France and, you know, already billion dollar, you know, much more beyond than billion dollar company. And so I think that holds true in any industry, but in fintech more than others, you have basically categories that are humongous in themselves, and actually starting within a nuanced market can be really good. I do believe that from a venture side of outcome, you do want to be investing in people that have a global mindset though, right? Global mindset doesn't mean you
Mm.
need to be global day zero. It means that you're thinking about it in a global scale. You want to be the number one player, even if you can have, you know, a Stripe, a Checkout, and an Adyen all coexisting together, right? So I think that's more the venture type of answer. Now, payments is interesting. I don't pretend again to be a top-down expert more than others at all.
Hmm.
But what I will say that I'm starting to see increasingly more, which is interesting, is that payments is becoming increasingly local. I'm not saying there's no
Mm.
global players, but like now with domestic real-time payment networks, right? Like, you know, you're starting to see people trying to bridge that. So like the, you know, payments providers of the future, or the ones that are more progressive, are trying to offer more and more alternative payment methods towards their merchants that are tuned to local nuances, and local nuances tend to be, you know, more progressive payments networks, right? You see that with UPI, with Pix, but now even in Europe, right? You have like, Blink and Ideal, and now France is
Yeah.
about to offer one, and Greece, talking about my origin, 2 years ago offered one. So it's interesting, right? Because, and I'm not talking about cross-border payments now. We have a tendency of more and more local on the traditional fintech side. Now, if you look at the other end of the spectrum, we saw the acquisition of Bridge by Stripe,
Yeah.
stable coins, and that technology is becoming increasingly more main market. That in some respects, unifies payments, right? Like with one technology, you can make things global. And so we have these two opposing trends. But if you think about it, they're not necessarily binary, right? Two can coexist in different examples, and one is not versus the other necessarily. But we're seeing traditional fintech becoming increasingly more local in terms of the solutions, while technologies like stablecoin actually globalizing the whole thing, which is quite interesting.
Yeah, I was thinking on a similar concept recently. I've been talking with a couple of fintech startups in payments in Latin America, and they were, let's say, following more or less the same path, that we followed on in Europe. They started from an infrastructure and a kind of open banking infrastructure there, and they are moving on to more simple use cases, more local use cases in payments that are developing as we are talking right now. So. My question was more, do you think that in the future that kind of infrastructure would be a commodity where we can use, for example, different kind of forms of payments that could either be a stable coin or a different, QR code payment or something like that based on global infrastructure, something more like in the Swift or UPI or Pix direction? Because I think that the two infrastructure that they've been built in Brazil and India with Pix and UPI are something like totally of another world. I mean, they built something crazy. They're trying to export it all over the world, but they made a wonderful job. I mean, something that I could never have think of.
Yeah, I would hope so, by the way. And generally, all the trends show that the actual payment itself is becoming a commodity, right? Like Stripe
Mm,
disentangling their payments and ecosystem, right? And, things like UPI, like Ideal, you can get like the API for free for now, right? As in, so I
yeah.
think that the underlying payment is becoming a commodity. I am hoping that these things get bridged over time. I think the ecosystem of value-added services you can build on top of is still a ripe opportunity, right? But I would
Yeah.
definitely think that the underlying payment is becoming more in a commodity. Another, not similar, and maybe I'm going on a divergent type of theme here, but it's quite interesting, is that although you're seeing the underlying payment commoditizing, like PSPs are like fighting for fees that are going super low, vertical SaaS companies and the
Mm,
payments they're enabling on top still command huge margins, which is crazy to me. Like if you think that the
yeah.
underlying payment, I recently was looking at a space that I've invested in. I don't want to say necessarily the category to not expose the company, but like, the vertical SaaS bundles the payment, and the payment they're taking like around 4% essentially, and Stripe
Wow.
is charging 0.5% of that. So like essentially as a vertical SaaS that bundles value-added services on top, an operating system, and charges for the payment, can make a huge margin on top of it. So we have this interesting dynamic where payments becoming commoditized, but being able to offer embedded payments within an operating system is still
Mm.
commands quite a healthy margin. So it'll be interesting to see where that goes as well over time.
Yeah, absolutely, yes. Let's make a step back and maybe from payments and talk about the fintech ecosystem overall. So we have been through basically 2 years of pain and a lot of work with the downturn and everything else. So first question would be, how do you pass the last 2 years in a market that was, going down the hill basically? And how do you see the future of these industries? So which are the main trends that you're following right now? And the things that you expect to see in the market happening very, very soon.
Yeah. again, it is important to caveat that I define fintech very widely, right? And so, like,
Mm.
I'll look at vertical SaaS, I don't know, for restaurant industry, I'll at Toast style, and I say, okay, you can
Yeah.
monetize the payment side, right? I'll look at, climate, and I'll say it intersects with either asset management or financing. I'll look at healthcare, and I'll say, well, this could have a benefits angle or an insurance angle to it, right? So I do think
Mhm.
that, but I will start by the more narrow definition just to answer your question, and then we can talk about the opportunities that I'm seeing in the market.
Mhm.
I think it's interesting how, like, when you think about core fintech, people think that it's saturated. But if you think about it from first principles, like the average NPS is like negative to low and like legacy technology. And what you're seeing also in the markets is there's periods where things concentrate a lot via specific propositions, right? Like, in the bull market, it was a lot about consumer fintech and like neobanks and
Yeah.
at different angles, and everything becomes a neobank and everyone needs a super app. Whereas, in the past 2.5 years was like the CFO suite, right? Like all these companies suddenly need to become profitable. So there's a tailwind in the CFO suite, and everyone's creating like, an AP product, a strategic finance product, a treasury product. And suddenly you're like, what else is there out there? But actually, like, financial services like capital markets and trading, risk, insurance and risk management, you have payments, which is humongous, as we just described, business, there's so much more to be done, right? And so even from first principles, there's so much more to be done. The last 2 years have been tough, but it's actually been an opportunity as well because there's been less
Mhm.
hyped rounds and more time to actually like
Yeah.
diligence. And there's still loads of opportunities, honestly. Like in the, you know, I've been investing actively, and from a talent perspective, by the way, which I think not many people talk about, I've never seen as high quality people coming out of businesses starting now something, right? In the broader fintech definition now, because in Europe you have a maturity, you have a lot of operators that are within scale ups who are taking time to IPO, who are always planning to, start their new thing. You have secondaries that are being given to like, the Stripe people and the Revolut people. It's
Mhm.
quite ripe if you think about it bottom up. And so on the one hand, I've been seeing like more incremental thinking when it comes to opportunities people have been going after the past 2.5 years. And now that's changing, by the way. We'll talk about that. But I've also been seeing a lot of really high quality talent tinkering, really wanting to start something new that's never been as high quality, like in terms of volumes, right, of people in Europe, right? In US, I think that a lot of that replicates at a higher level as well, potentially, but I'm just
Yeah.
going to focus on Europe for that. Now, when it comes to opportunities, like I'm seeing a couple of things recently that I've spent a lot of time on. There's increasingly, and this is much more non-traditional fintech necessarily, but that's a
Mhm.
lot of what I'm seeing. Like building operating systems around traditional economy businesses, right? Restaurant, construction
Mhm.
industry, the dental industry, right? So can I wedge in with like automation on your existing system now with LLMs and AI, and then become a workflow, and then suddenly like monetize with payments, with lending, with revenue cycle management, go up the stack. So what like Toast has done or Service Titan has done, but 2.0 versions of that. And now with AI, you can go after traditional industries where before you weren't able to really tap into those because they've been averse to adopting software. Whereas here, because of AI, you're wedging in with workflow and then adding a layer of software. So I'm seeing a lot of
Mhm.
that at the moment, and like across both US, like East Coast and Europe. I'm seeing a lot of intermediated markets that have traditionally
Mhm.
not been really digital now actually having a chance with quite a similar playbook I mentioned before. So if you think about, I don't know, wealth management with financial advisors, or like
Yeah.
mortgage with brokers, or insurance with brokers, like all these markets don't really have new operating systems. Like the best we've seen is like software that's attacked the long tail with a better UX product on average. Whereas now I'm actually seeing, wedging in with like automating your work and then doing the similar thing, right? I give you an example. In wealth advisors, I'm seeing propositions where they're saying, okay, Mr. and Mrs. IFA, like, or wealth advisor, I'll start by
Mhm.
automating your compliance and reporting. And then by doing that, I hook into your internal data. Then I can start automating all of your workflow and then become an operating system. And then I can also integrate on the back end, and suddenly you've digitized the whole thing, right? And that's not something that's attractive only on the long tail. anyone can be attracted to that. Similar thing, commercial insurance. You're doing this manual work. You're a broker. You like being on calls or on email, and but what if you can wedge in and you can start automating a lot of your manual work? Suddenly, you're building a data stream and a software on top, and finally, before you know it, you've built a new operating system across that. So these are the types of things I'm seeing. I am seeing more purebred like AI for financial services. They look a bit more like Palantir products for financial services at the moment. I'm seeing a lot of other things we can talk about, but it's quite an exciting time.
Yeah, I think that the impact of AI right now in financial services has been a little bit maybe limited to a part of the workflow that, in my opinion, is more on the cut cost side, you know. So I've seen, for example, a lot of banks trying to implement that, you know, to reduce the workload on customer support, and trying to see that, let's say, for example, a lot on phone call and everything else. So I'm seeing that mostly to reduce the amount of people that are present in a financial institution, rather than producing new, for example, use cases or more revenue. I think that is an interesting concept, you know, because most of the time, for example, in the pure tech side, they use AI in order to produce new things, or, for example, new concept, new use cases. While, for example, in more traditional businesses, we try to stick more to the fundamentals, you know, and seeing, okay, can we
Yeah.
cut that cost? Can we automate that? And I think that it's kind of limited. It's kind of limited reasoning in financial services, maybe.
It's interesting. Look, I mean, I think it's also a function of time, right? Like you gotta
Yeah,
first digitize the old to be able to, right? But
yeah.
yeah, I wouldn't disagree with you on that. I will also think though, it's interesting if you're backing application layer AI. A lot of people tend to sit on the two extremes of the pendulum. Either they start like backing everything that looks like AI, which is extremely few, or they're like become super skeptical and they're like, well, OpenAI will release this new thing and then you'll be out of business.
Mhm.
What I like by some of this, types of things I mentioned previously, or some of those things you're mentioning yourself, is that in first principles, these are not trying to kind of like offer something completely new, but it actually creates a reason why something that hasn't worked before can work now. Because if you go into application layer I would assess it as if it was like SaaS, right? Like,
Yeah.
SaaS is not defensible. You need to, if this
Mhm.
AI enables you to do something you couldn't do before, that's just a wedge into the market. And then if you have a really good reason why, you'll have really good data and you can build really good product and can execute fast to build a new wave of something that makes sense, right? And so
Yeah.
when it comes to financial services, on average, we're seeing less of the like, oh, AI does this completely new crazy thing we've never seen before, where you can get like potentially dragged into like exciting things that are a bit too early to market or that can be disrupted overnight, but you're kind of like more dragged into things that are very tangible today that weren't able before, that like solves a business critical problem. But what I will say, just to balance this a bit, is that I've been talking with people that are very much kind of at the edge of what's happening within AI and financial services. Even though it starts looking like financial services are adopting all of this AI, in reality, most of them sit behind SLAs of like the open AIs of the world because they're
Yeah.
nervous and they're doing it for marketing reasons. So like we have a lot of room. At some point, it makes a total sense to kind of like adopt a lot of that. But I think we're at very early innings of this still.
Yeah, I totally agree about this one. I also believe that many of the financial institutions out there are a little bit scared of the kind of knowledge that the kind of, let's say, things that you can do with AI, because they are not fully prepared for it from one point of view, and at the same time they do not know on how to use it properly. So they are just, you know, sticking, as you said, to first principle because it's easier to understand those kind of concepts. But sooner or later they will have to, you know, start thinking about many other things. Like, for example, they are already requested by regulators to take a look at quantum computing, because sooner or later, all the encryption that they use to access the own banking, for example, will be updated. And they need to take a step in that direction because it's going to be critical. So I think that you cannot, let's say, stay on the fence anymore on those kind of things. You need to act and you need to think about it in advance. Otherwise, you're going to have a problem sooner or later.
No, I agree. I don't disagree with that for
Yeah.
sure. I think it makes
Yeah,
sense.
I was thinking on another very interesting concept that you said before. You were talking about the concept of collaborative investing that I think that is very, very interesting. But I would like to ask you a little bit more widely about, the venture capital ecosystem at the moment, because some of the conversation that I had recently, they were all going in a direction of, okay, we add a venture capital system, a way to invest and everything else that is not exactly working right now. So the kind of system upon which venture capital was built on is not exactly producing the results that we were expecting at the moment, or at least not for everyone. So I was thinking that if you add, let's say, an idea about a different kind of concept in that direction, a different kind of venture capital system, in order to, fuel innovation, for example, in Europe, but overall in the market.
Look, this is a this is a very I'm more of a microeconomist, less of a macro, right? I'll focus on the
Yeah.
today. I will say that you know, the underlying drivers of that at the moment are both, intense competition. And so, like, a lot of money
Mm,
chasing, like, few deals that are really competitive. That, a lot of funds have grown to really high AUM. So, even though they're playing in
mm,
the same field, they're playing a different game on the field. And that distorts, a lot of the entry valuations potentially, etc. But like the optimist side of me will say that that's also affected by the fact that we haven't seen a lot of distributions in the last few years because the markets have been quite shut, right? So like the
mm,
other side of the pendulum is that, when we do start getting public markets to work again, if we start having a bit more functioning M&A market, which I'm not going to bet on, but maybe we get a bit more optimism in that regard. We'll start like feeling much more optimistic in that sense. I do also think that the American view, let's say, is that like AI and a lot of that will spare like the value of outcomes that you will have we've never had before potentially, right? It's a bit
mhm.
like before SaaS and mobile and cloud, we thought of different, we thought $1 billion outcome or $10 billion
Yeah.
outcome was like, and now you have hundreds of billions of dollar of outcomes, and you have some of the generational company even a trillion, but like if the average, like really great outcomes become even larger, then that justifies. I'm not a prophet, but I think that will course correct itself. I think the nuance, which I'm not sure anyone's figured out yet, and definitely the fact that I'm a microphone makes my life easier on my positioning on it, is that increasingly we're getting more complex type of businesses, right? It's like if you invest in AI businesses that do compute, a lot of your expenditure goes on hardware. If you invest in like biotech, like it's a very different risk return profile. If you do robotics or defense, it's quite a different business. And before, a
Yeah.
lot of them tended to be specialist areas, whereas now we're starting to see because of AI, like a lot of these businesses can be a bit more mainstream in the way they operate. A lot of investors tapping into some of those businesses, and it will be interesting to see what that does for capital efficiency and the return profile of the fund, of the investment in itself, right? And that I have no answer. I think that's the most interesting dynamic that's happening in the market at the moment, which I don't know how it's gonna fare, right? For me, I'm saying it's easy because by being a micro fund, by design, like I cannot get into like really high dilution type of investments, right? By
Mm.
design, and so I don't believe in like being very binary, like this works, this doesn't work. Like I'll always evaluate things that I think might be phenomenal founders going after a really interesting opportunity within my field. But I think it makes, the average case really hard for me to invest in something that's very kind of capital intensive, right?
Yeah.
Whereas, it's something we're seeing more and more of.
Yeah, I think that the concept of having smaller funds compared to, to some giants that there are, for example, very common in the US, a couple of them also in Europe. It's a very interesting concept. And also from a statistical perspective, I remember to read something about it that usually micro funds tend to return on average, of course, a little bit higher than huge funds because of the kind of flexibility and the kind of velocity that you can have. And this could be potentially a good concept for the future, having more people on the market, more funds, a little bit smaller, but with the possibility to deploy more capital and to have more liquidity events more frequently, and sustain the kind of innovation that is needed in the market.
I definitely think that's a good thing, by the way. Like the rise of microfunds in Europe the last 3 to 4 years, and similarly in the US, it's been a thing
Mm.
maybe 12, 15 years. But I certainly am, obviously, I'm drinking my own Kool-Aid here. But
Yeah, of
I
course.
honestly believe that, having funds that are structurally small and flexible, that can be a complement in rounds that bring specific like value add, whether it's a network, a specialty, you get a 24/7 like coverage of someone that's dedicated to it to
Mm.
support, is really, really great, right? I think that it will be interesting to see how that shakes up as well over time, right? Like, do you want like a lot of generalist microfunds in the market, or do you
Mm.
want like microfunds focused on their specific value? And it doesn't need to be industry, right? But
Yeah.
it's generally a good trend, and it's very positive, I think, in the market. I think there is two interesting dynamics when I look at Europe. One is like seed funds. So like there's a lot of seed
Mm.
funds that have raised relatively good amounts. And so now that the last 2, 3 years, a lot of multi-stage funds are also playing at seed. And then you have a lot of micro funds that complement these rounds, whether they're led by a seed fund or a multi-stage fund. There's a bit more competition. So if I was a seed fund, I think, being able to find, your right to keep winning consistently and remain relevant. And I think for sure, a lot of them are doing a great job there. But I'm just saying it'll be an interesting trend to see how that evolves. And then the others, like multi-stage funds that have become really big, right? Where again,
Mm.
these funds are playing a different game on the field. And again, this is an interesting trend in itself, and seeing how that affects the ecosystem will be interesting. We've even seen some consolidation in the market, right? Like with some funds acquiring
Yeah.
other funds, which has been quite
Yeah.
an interesting thing in the past few years.
That was a very interesting trend, to be honest. I saw a couple of acquisition of portfolios, also for a very, very low kind of valuation. And I thought that it could be a trend, also going on in the future. But yeah, we really need to see. I think that the kind of aggregation that I was expecting on the market never happened, really. Like, for example, I was expecting a huge wave of M&A operation in the fintech market that didn't appear, basically. I was expecting more or less the same in the venture capital market, mostly with smaller portfolios or portfolio made of companies that were going very, very bad. Uh, but we didn't actually experience that. We experienced a little bit of it, but not the full experience. But it's interesting to see if it's going to be a trend in the future. Maybe talking a little bit more about your, let's say, experience as an investor exactly. Uh, how do you actually choose which company to invest on? You were talking about people a lot, so I think that is going to be probably one of the best part of your formula, I would say.
Absolutely. Look, I mean, I wish I had the secret formula, because there's no one way to of doing this. But I will say, if you compare me to other specialists, I over-index on
Mhm.
the people side, right? If you
Mm.
compare me to other generalists, I try to blend the prepared mindedness, focus, and value add I've built from like my network, to kind of differentiate, right? So I'd say a lot of domain experts tend to over-index on like thesis in a traditional sense, and like backing first like market opportunities. And by the way, I think the later stage a company is, the more merit there is in that. And I'm not saying like
Mm.
my approach is better or worse. I just think it's different. Mine has always been that of like the people, right? So, and that's been when I've compared myself to other fintech investors, what's differentiated me, right? So like I talked about Atlar, but similarly with Primer, with another investment of mine, these are both cases of companies where, by design, I meet a lot of them because I focus in that area. So I had a prepared mind, but I always focused on the people first. In Primer's case, like I looked at payment orchestration. I met a bunch of companies before. Some of them got acquired. Some of them didn't go a long way. I felt like, look, this category is really tough to monetize. You get a thin layer on top of payments is really hard. And then I met Gabs and Paul, and literally, you
Mhm.
should ask people around me. I committed like 2 days later, like, we had done the deal because the people had a unique insight, right? They were obsessed
Yeah.
about the topic. They were market insiders. They had a unique insight about the space that made it quite interesting, and their ambition was huge, and they wanted to go all the way, right? And so the difference is, because I over-index on the people, I try to not miss on things because I'm like, no, I know about this space. It's really hard. It never works. Because a lot of people say, oh, I'm a specialist, but of course I have firm beliefs loosely held. It's very hard to combine that, right? Like for me, I'll
Hmm.
just want to meet the person, and if they have a unique insight and something that's really spiky, like I will back them and I will forget about my premise, and that will be how I will learn, and that's why I'll back them, right? So I think that's a good example of like me being people first rather than kind of like specialist first, right? And I think that combination of the fact that I had the prepared mind because I've met a lot of those
Mm.
people before means that I can have build faster chemistry with those founders because I'm talking the same language. Means I can focus on the areas and probe into the spaces that I think are more relevant. But I'm firstly assessing the people because at pre-seed seed it's all about that. And so my firm belief it's all about finding those founders. And that's worked really well for me essentially. That's there's no
Yeah.
like secret to success, and I'm definitely not there yet. And but I would say that's kind of what's working well for me.
Yeah, well, that seems like a very good formula, to be honest. So as of right now, it's working and it's working properly. Maybe last question. Would you prefer, also taking in consideration what you just said, would you prefer someone that is actually a real expert in that kind of topic, or on the market that they're building something into, or someone that is literally obsessed by the kind of success that you need to have as a founder? So you prefer knowledge or obsession?
Obsession. But the thing is like there's very few areas where it's such an insider space where you need
Mm,
insiders for sure. So it's like capital markets, usually you need insiders. Like the secret of success
mm,
of I Just Market is the guy knew like he was best friends with all the guys on the trading desk on the debt side, right? Like so
mm.
um, similarly, I recently did a deal with Rerail within the physical commodities space. Like, good luck penetrating that space if you're not from the like the
Yeah.
insider, speaking the lingo, knowing to open doors. There's, these people like will look down on you, right? These are the exceptions, but I am much more of the obsession first. I focus on first principles, seeing the problem, being obsessed by it, and I firmly believe that some of the and again, there's many ways to heaven, there's many ways to success. But some of the best companies we've seen have come from complete outsiders. They get obsessed about the problem, surround themselves with some insiders, but just execute, to their best of abilities to move markets and opportunities. I think there is, on average, and I'm sure I'm going to be proven wrong with specific examples because that's the nature of the market, but there's on average more tendency for incrementalism when you're an insider, and it's harder to find people that want to go at specific problems with like slight naivete, going all the
Mhm.
way with an ambition to shake it up completely, right? And I think this is what you want if you want to build really huge outcomes, right? You don't want incrementalism or slightly process innovation, or and so that's why I tend to over index more on the outsider that's seen the problem from the inside, that surrounds themselves with insiders but wants to execute it in a radical way, essentially.
Great. Anthony, this was a wonderful conversation. It was very, very interesting for me. So thank you very much for joining. Really looking forward for your next investment. I will follow you very, very closely.
Thank you for having me. It was a lot of fun, and hopefully, we'll cross paths many many times. So I appreciate you having me on.
Sure. Absolutely, yes. Thank you very much. Bye bye.